Hi, I'm Candace, and presenting along with me are Cassandra, Abdur, Jennifer, and Miko. Our audit group will be presenting in this video a summary of our audit report completed for our client, the Empire Company Limited. To give you a background of our clients, they are a conglomerate company dealing in food retailing and real estate investments. Established in 1963 and headquartered in Nova Scotia, Canada, the Empire Company mainly consists of the supermarket chain Sobeys, which is one of the top 5 grocery chains in Canada, with a location in every province. They also have significant influence and real estate partnerships with Crombie, REIT, and Genstar.
Based on the Porter's 5 SWOT and PESTEL analysis, Empire Company Limited has many factors that would increase overall audit risks. Because Empire Company Limited is experiencing losses from their food and real estate industries, there is a potential that management can manipulate their financial statements in order to look better for investors and the public. Empire Company Limited could be facing various changes that can pressure management to manipulate their financial statements. For example, in the political and legal category, there is a NAFTA renegotiation that could reduce the food trade between Mexico, Canada, and the US. There's also a new Safe for Food Canadian Act that is in effect from the Canadian Food Inspection Agency. Both of these changes can increase the cost of operations for Empire Company and could potentially pressure management to understate their expense account or overstate their sales account. There are various operational activities that could give rise to pressuring management to manipulate their financial statements. Empire Company did lose $1.36 billion due to the failed Safeway integration in Alberta, and they are still facing some difficulties with integrating Safeway in various areas in Canada. This could be due to the high power of buyers. Since their customers are price sensitive, if other food retailers offer the same product with a lower price, consumers won't hesitate to turn away from Safeway in order to save some money. With this in mind, there is also a high competitive rivalry everywhere when it comes to the food industry, because there are grocery stores in every city, and they can or would offer lower prices that Safeway may not be able to do. There is also the lack of unionization in Ontario and Western Canada that has angered many employees. This has not only caused legal issues, but also tarnished the reputation of Empire Company. Because Empire Company Limited is facing some very challenging hurdles that they can't seem to overcome, overall, this increases inherent and control risk, which in turn will increase the overall audit risk.
Here are some financial highlights of the company. The company had an increase in revenue in 2016 and is expected to decrease in 2017. On the other side, the company had substantial losses in 2016 due to increased costs after the takeover of Safeway retail stores in Western Canada. As it is reflected in the profitability ratios, the company had pretty much flat gross profit margin in 2016 and is expected to remain flat in 2017. The profit margin, the return on asset, and the return on equity ratios were negative in 2016 and are expected to rise in 2017. As for the materiality for the company, we considered several benchmarks in our calculation. For the planning materiality, we calculated as low as 14 million and as high as 500 million, and we will be using 15 million for the planning materiality. For the performance materiality, we calculated as low as 8.5 million and as high as 300 million, and we will be using 9 million for performance materiality for the company.
Let's move on to risks for Empire Limited. There are two types of risks: business risk and audit risks. For the business risks, the first is operational risks. Due to the failed efforts to integrate Safeway in Alberta area, this resulted in a $1.36 billion losses on the related financial statement. In addition, Safeway has previously encountered an operational risks when they were advertising things that they could not fulfill. Finally, Sorbet lack of unionization. This may cause employees dissatisfaction in Ontario and Western Canada. If not properly adjusted, potential for employee strikes and resignations may become more substantial. The second one is reputational risks. Due to the entity risks in operations, the Empire company's reputation could decrease, and in return decrease their customers' loyalty and potential for their future revenue. There are top 3 audit risks for Empire Limited. First, fraud. As there has been significant change within the company recently due to the operation endeavors and changes in leadership, a large portion of the audit will be consist of text of details, interviews, recalculations, positive confirmations, and a large sample size. Risk of material misstatement within the expense and revenues accounts. Due to the significant losses incurred by the companies in the previous period, there will be extensive testing done on all expenses and revenues accounts to ensure that revenue are not overstated and expenses understated. The third one is risk of proper asset valuing. Due to the failed Safeway integration, there will be extensive testing done to ensure that all assets have been properly valued and impaired in accordance with the proper financial framework.
Hello everyone, I'm Jennifer. I'm going to talk about the revenue cycle and the overall audit strategy. So for the revenue cycle, we find the Empire company's ledger of the revenue stream is from the Sorbet and the partnership with the Combi REIT. We used a control testing approach with an analytic procedure to compare the current and the budget sales revenue. We also review the relationship between the cost account and the sales account and so on. Our key control includes the segregation of duties, IT controls, and the frequency of the transaction control. We also check the related financial statement account, such as sales revenue, account receivable, or inventory. We conduct the occurrence, and the cutoff in our assertion. For the specific audit procedure, we send in the confirmation letter of the accounts receivable to the complaints and customers to make sure the Vampire complaints receivable account is correct. For the overall audit strategy, because of the high inherent and control risk, then the detective risk is low, which is mean we won't trust the company's internal control. We will look at their materials. So we decide to use a substantive audit strategy. For example, we reviewed their general transaction to see if it's match.